going to go back in time to see how the regular trading hours with the contract adjusted to VADJ. Let's see how market does at these gradient levels. So I went back in time on Friday 10th of April, and from this information here, looks like note that the NQ market regular trading hours opened with a gap and it retraced back to 78% retracement level. So this thing here, if you see where the Thursday market closed at 4 p.m. and where it opened at 9:30 in the morning on Friday, you note that there was a gap opening high. So if you grade inside the gap, the market 70% of the time it will always retrace to what? It will always retrace to the opening range gap. Okay, you can see that one inside there, and then it left. Now inside here we have a past presented bearish fair value gap. So I took that trade based on that one back to what? Back to the 70% retracement area after that fair value gap has been utilized. Exited at 50% of the retracement level, and that was a perfect trade. Okay, so you can see that the NQ market regular trading hours open with a gap and it retraced back to 78% retracement level, that gradient level. Now if you go back here again, there's another area of interest here. So we look for where the market had closed and where it opened. So right here there was no trace. The Nasdaq just respected the upper quadrant. So in this case we can rightfully change the color for this one to be maybe green. Okay, so the upper quadrant level, top there, the upper quadrant, and then it retraced from there. So in this opening range gap, it opened high, and when you grade inside of it, the upper quadrant level played its role right inside of there. So that is it for that one. On this other day, we know that regular trading hours market retraced back to 50%. Okay, right there, of the opening range gap. That's the difference between the regular trading hours close to the open of the regular trading hours on the next day. Always anticipate pullback to at least 50% of the regular trading hours opening range gap on the Nasdaq. You can see how it played out really well, hitting that level and then it dropped. Okay, so inside here we can see that there is a breaker. Okay, inside there, you extend it, you will see how that bullish breaker worked out at the end, and the market respected it and it dropped down to the downside. Inside here we have the opening range gap high. You grade it and then anticipate the pullback. So it came upper quadrant levels played out in this day. Upper quadrant and lowest quadrant levels order block held the price higher. So right here before it came back to this order block here, and it played out really well after it hit that order block of the 4 o'clock p.m. close on Thursday 2nd of April right there, and then it went high from this level here. Okay, so this upper quadrant level held the market price up. Okay, that was the opening range gap of that day. So if we come to this one here, there was full closure of the opening range gap. On this day, 50% of the opening range gap played showed some slight retracement inside here, small one. It played out well. Now here we were not given any chance for any entry, it filled up the whole thing. So that is how to use or to measure opening range gaps using regular trading hours.